Nalang ko ask na question, sir.
Yes.
It fluctuates sa fair value and sa gain of sa loss sa account total kay record.
Yeah. Every time there's a gain, you recognize a gain. Every time you recognize a loss, you recognize a loss. Okay? You do not cancel out the previously recognized gain. You do not cancel out the previously recognized loss. Okay? But ultimately, class, depending on the practice of the company, the gains and loss class would just be canceled at the end of the year. Okay? If there's a gain would be credited. If there's a loss will be debited. Okay, you do not cancel out the previously recognized gains and losses because it would result in weird entries class. If you cancel out the gain, supposedly a gain is a credit. If you cancel out the gain, then you will have to debit it. And especially for companies that use computerized systems class, they will not be doing that because it would result in a weird entry wherein a gain is debited or a loss is credited. The netting class, the offsetting would be done at the end of the year. Okay, so they will have separate accounts class, but the total gain throughout the year, the total loss throughout the year would be charged against one another at the end of the year. They would be cancelled out. You would still maintain separate accounts for the gains and losses. Okay, but in the income statement, the amount that will be reported there would only be one item, and it will be the net amount. If throughout the entire year gains amounted to 50,000 and losses amounted to 49,000, you do not report gain of 50 and loss of 49. You do not report these two items. You do not present them as separate line items. What will be presented in your financial statement would be a single amount. But what account title will be used? The one that will survive the offsetting class. So in our example, it would be the gain. You will only report a gain, but the amount of gain that will be reported class will just be 1,000 net of the 50 and 49. And the 1,000 class can still be arrived at without monitoring the 50 and the 49. You can still arrive at the 1,000 by comparing the January 1 and the December 31. Now, other questions raised by your classmates class are understandably also regarding the measurement chapter class. I wanted you to experience going through chapter 6 class with the expectation that I know you will be confused. I just want you to be able to at least encounter it and understand that there are things that are confusing. Okay. But really, class, you are not expected to have a full understanding of everything that is discussed there. And besides, I cannot emphasize this enough. Our discussion, our learning of the conceptual framework class is more on, again, to develop the correct mindset, is for us to be able to obtain the proper faculties, for us to be able to have better appreciation of the standards. Okay? The framework class, even with the admission of the International Accounting Standards Board class, is more for the use of the standard setting body in the creation or in the drafting of new standards. As for us, again, who would just be preparing standards, financial statements based on the standard, we really do not have to concern so much ourselves with the discussion of the framework because we will just have to follow the standard. Okay, but since the items contained in the framework class would ultimately come out in the examinations and the board exam class, you're expected to be able to be familiar with the terminologies and concepts class. As to being able to apply it in all scenarios, as being able to use it to develop our own standards, there is no such expectation class. The expectation on your part is to simply be familiar with the various measurement models or the various measurement principles class. So, as I will discuss later class, the expectation on your part would just be to be familiar with the various measurement principles and to have a basic understanding of what they mean and how are they used in the standards. Okay? And the hope here, class, is that by the time we have discussed the standards class, then the concepts discussed in the conceptual framework would now be clear to you. Okay, you would be, by the time we discuss the other standards, you would be able to say, oh, this is an application of what was mentioned in the framework. This is what was meant by this part of the framework. Okay, but the problem is that is not how we are supposed to use the. That's not how we are supposed to discuss the framework class. We are not going to discuss the framework uh, by matching it directly with the requirements of the standards, because supposedly the framework is conceptual. We're just talking about the concepts. Okay, but on our part as students, our understanding of the concept class can come from our reading of the standards. But supposedly, the concepts there should be independent of the standards, because the standards are the result of the concepts that govern the preparation of the financial statements. But again, as students, it's entirely fine that our understanding of the conceptual framework will be driven by the standards. Okay? Besides, the standards is what is most important to us. Okay, the framework again is of very little practical use to us, unless if you ultimately become members of the International Accounting Standards Board class, then we can simply gloss over the framework. So I understand that you feel the need that there's so much you have to understand from chapter 6 of the framework. Okay, but I also want you to understand that the insufficiency that you felt is absolutely fine, and we do not have to absolutely fill in uh, the feeling of being lacking that you felt, class, as long as you were able to encounter the terminologies and have a broad uh, understanding of what they mean. Okay. Again, do not be extremely worried because just because you got confused with chapter 6. Okay. Now let's try to go over. Let's try to start now with chapter 4, class. As I have emphasized in a number of instances already, class. Out of the 8 chapters of the framework, class, chapter 2 and chapter 4 would be rich sources of questions. Okay. Chapter 2 is about the qualitative characteristics of financial information. Chapter 4 now would discuss the elements of the financial statements. Okay. As I have discussed in the previous recordings, class, uh, the elements of the financial statements are the items, basically, that are presented in your financial statements. Okay. And when we are now talking about financial statements, class, the elements here are simply representations of the information that is required to be contained in our financial reports. If you've already seen the chapter 3 discussion, class, we've compared there the difference between a financial report and a financial statement. Financial report is broader, financial statement is more specific. So if you can recall, class, in the objectives of your financial reports, uh, one of the objectives there is to provide information, useful information about the economic resources of the entity, the claims against the entity, and the changes in these resources and claims. Okay, so basically, when we are now talking about financial statements, the financial statements would still be providing information about economic resources, claims, and the changes in the resources and the claims. But this time, we are now being more specific, class. When financial statements talk about economic resources, we now refer to them as our assets. When we talk about claims in our financial statements, okay, we now categorize them into liabilities and equity. Both items represent claims against the entity. Both items represent claims against the resources or assets of the entity. Now, if we're talking about the changes in our resources and claims, then they may be categorized into income and uh, expenses. Okay. A positive change in our resources, an increase in our resources would be referred to as an income. A decrease in our liabilities or the claims against the entity would also be an income. The inverse would be true for our expenses. Okay. So my point here is that we are not really talking about something that is new. We are still talking about the same information that is provided by financial reports, by general purpose financial reports, but we are just molding them to more specific items. Okay? And the reason, class, that a lot of questions will come from chapter 4 class is because of the fact that there are terminologies that are introduced here. Number one would be your elements of your financial statements. Okay, you could be asked as to what are the items presented in your financial statements. Okay, and one of the choices could simply be the elements of the financial statements. That's one possible question. Another possible question would be simply for the definition of your assets, liabilities, income, expenses, and equity. Okay, that's 5 questions already. You'll be given a definition, and all that will be asked from you would be whether it is an asset, whether it's a liability, whether it's an equity, income, or expense. Okay. While there may be other questions, class, not simply identification or definition of terms, okay, but it would still boil down to the definition of your assets, liabilities, equity, income, and expenses. Okay, all other questions would involve a breakdown of our definition of an asset, liability, equity, income, and expense. So at this point, class, it's really very important for you to be able to remember and recall by heart the definition of our elements of the financial statements. Okay. But at the very least, if someone asks you what are the elements of the financial statements, you should be able to provide the answer that the elements of the financial statements are our assets, liabilities, equity, income, and expenses.